Hi, Maggie. It's so great to have you today.
Thank you for having me here today.
What is reverse mortgage?
Oh, well, reverse mortgage is a loan that is available to homeowners who are 62 and above that enables them to tap into some of their current equity.
What about if a husband is 62 but wife is 60?
We see that a lot. That's still available as long as one of them is of age. We can still do the reverse mortgage.
Both of them are still going to be on title, whether or not on the loan.
Correct. So if they're both on title, as long as one of them on title is 62, we can do the loan.
I'd like to hear from you who has been in the business, especially for the reverse mortgage for over 30 years. Mm-hmm. What do you say is the reason that many people should get into reverse mortgage?
I think the biggest thing that I've seen in 30 years is that anyone who wants to tap into their current equity, if they meet the age, they're able to do that with a reverse mortgage. There's not a particular reason, although many do use it for supplemental income. Well, let me just say, if somebody wants to continue a certain lifestyle, you can access the equity in your house and continue that lifestyle, right? Because that's your money, and we make it available through the reverse mortgage. So that's one example. We've have other people that want to use the money for things that they've wanted to do in their lifetime. Like one of my clients bought a Maserati, so he wanted to use the equity to buy a Maserati. Yeah, so I mean, there's many reasons, but it is another bucket of money that people do have available to them. So there's three factors that we use into calculating what's available to someone, and one of the factors is the age of the youngest of the two on title. So that would be one factor that we use. The second factor would be the value of the home. So we look into the value of the home, and then of course the interest rate at the time that we do the loan. So those three factors will give you a percentage, and we call it age to value versus a loan to value program because of that, because the age determines what part of the value they're entitled to. So it's a percentage based on those three factors.
If the loan amount is 500, maybe 80 years old borrower, how much they can tap into the equity of the house?
That's a really good question, Chacha. A lot of it, it goes into a calculation. So I'm going to say, just from the top of my head, it can vary depending on the youngest of the two, right? If the mortgage balance is 500 and their value is 1.5, I would say they probably would qualify somewhere between 668 or so of the value of the home, and that would be used towards paying off the existing mortgage, and then the difference would be available to them.
Hang on. So you said 60% of the value, which is 60% of 1.5?
It's actually no, it can't be 60%. It's usually anywhere between, depending on the age, anywhere between, I would say, 30% to 45%
of the
value of the home.
Of the value of the
value of the home.
That's not much.
Yeah.
Right?
Yeah. It's not, but for a lot of people, it's enough to pay off what they need to do.
That you used to make, like principal, interest, property tax, insurance, and HOA. Not all of this has to be paid forward. So you just need to pay property tax, insurance, and maybe HOA.
Correct.
Okay. How is reverse mortgage different from regular home loans?
Well, the difference is that with a regular forward mortgage or conventional mortgage, you have a monthly payment that you have to consistently make for 30 years, or depending on the years that you got the loan for. With a reverse mortgage, there's no maturity date. So the maturity date will be when you move, you sell, or pass away, and you don't make a mortgage payment. With a reverse mortgage, you do have to pay your property taxes and insurance, okay? And your HOA, if you do have an HOA.
So a lot of people really have a misconception about reverse mortgage, that is a bad loan to be in. what do you say? Because it's in fact an FHA loan, which is a government-backed loan.
Right. What I would say, it's not a bad thing because I can't wait to do my own. I really believe that, you know, it is FHA insured, so there's a lot of protection for our seniors. But not only that, I mean, when it gives you a peace of mind and you're able to tap into another bucket of money that you have available to you, how bad could that be?
Yeah, and especially if there is a cap on the max of the loan amount you can get, you still can leave the equity for your heirs.
Definitely, you could.
Right?
Mm-hmm.
So that's good that you can share experience that you have for the last 30 years, because a lot of people may not have the right contact who has enough experience to share what they have seen in so many years.
Yes.
Right. Okay, so now I'd like to hear from you, what are the stories, you know, good stories that you have heard from the clients that would not survive or would be late on their mortgage payments if they were not doing the reverse mortgage with you?
Well, definitely there's a lot of good stories in 30 years. One of the ones that I can tell you is there was a client who lost her spouse. And if they had not done the reverse mortgage at the time they did, she probably would have been in foreclosure. And she definitely did not want to be in foreclosure. But they set it up before the husband passed away. So that gives you, you know, a lot of happiness that you're part of that change in life, or peace that you brought that family. The other one, I would say, there was a client of mine who is still alive, and he did the reverse mortgage to supplement his income. A retired vet, was in the military, and he always praises me because he's grateful that he found me and he was able to do the reverse mortgage, because that really has allowed him to continue to travel and do whatever he wants in life before he's gone.
I like when you say supplemental income. Can you just give a little bit of example how it works?
Sure. So for supplementing income, you know, you're able to access the equity in your home, and you can actually have a monthly draw coming to you, kind of like the Social Security, if that's the way you want to place it. So it would supplement what you currently are making. So it would give you an additional income coming into you for the remainder of your life, if that's the way you choose it. Or you can have a line of credit where you can access it in case there's, you know, unexpected expenses that come up. Say you want to fix the roof or need a new car, or even like in-home care, which a lot of my clients have done lately. So you're able to get the money in those forms, and that will supplement your income, right? It adds to your current income.
And also on top of that, you can also reduce your expense as well, because you don't have to pay the principal and interest as you are carrying regular mortgage.
Right. So if you're able to access your equity with the reverse mortgage, you usually what we do, we hold first position on the property. So if there's any mortgage on the property, we would have to address it. And if you address that, you no longer have that monthly payment, which frees that money up, and you can use that money for something else.
Right, on top of whatever monthly payment that you're gonna get. Okay,
exactly.
Sounds great. But other than that, what are the pros and cons of reverse mortgage?
Well, I'll start off with the cons, because a lot of people will always bring that up. You know, they always say there's something that just doesn't sound right about reverse mortgage. So the cons about reverse mortgage that I get a lot is that the heirs will have less inheritance at the end when the person passes away.
I heard that a lot too.
A lot of people do ask that question a lot, and I can tell you that one of the things is that we only loan a certain percentage of the equity, so your house still appreciates even though the balance is growing. And it really is hard to say if it would ever match it, because the appreciation of the house is still going up even though you have a balance growing here. So for it to meet here would have to be something like if the market changes like in 2008 or 2009. Then maybe at that point it would be. But I can tell you in 30 years, all of my clients' heirs have received money at the end.
All right, that's good to know. Thank you. And what about the cons?
Oh, the cons. Well, the majority of the cons that I hear a lot is that the fees involved with these loans, and that's very detailed, so it's better to do one-on-one to actually go over that. But it really varies as well, because there's different fees depending on what program you're actually looking at, whether it's a line of credit, a cash out completely, or a combination of a monthly draw, or a term option.
If a husband is doing a reverse mortgage, but wife is not on title, not on the loan, what would happen to the spouse, like, surviving spouse, or when the borrower already dies? Will the surviving spouse be able to live in the house?
Well, actually, those were new guidelines that were actually brought into, I want to say 2012. Don't quote me on that. Hard to remember all those dates, but if the non-borrowing spouse is still able to age in, they are able to age in place and not have to relocate. If there is a line of credit, though, that line of credit is frozen and it's not available to them, but they can still age in place till the last day of their life.
What do you say, age in place?
Age in place.
What does it?
Continue living in the house until the end of life.
Got you. That person has to live in that house.
The guidelines tell us that it has to be the primary home, and the primary home is usually 6 months and 2 days out of the year.
Got you.
So as long as they use the home for that time period for the year, they're okay. But
if
it's considered a principal residence.
You have to be living in the house, but if it's not within 12 months, then it's considered a rental or whatever. So, you'll be called for the mortgage.
That's another guideline. So if you're out of the house for 12 consecutive months, the loan does become due and payable. And it has to be 12 consecutive months. So if you have, say, if I have a client who is in rehab because they had a fall or whatever, and they're in there for 4 months, but they still intend to come back to the house, the loan does not become due and payable because it's not 12 consecutive months.
Right, got you. A lot of people would like to ask this, I'm sure. How would they know?
Oh, that's easy. So usually when we fund the loans, it goes to a servicing center, and that servicing center will send you an occupancy letter that comes to you every year. That occupancy letter has to be signed and returned. If you don't return it within a certain amount of time, definitely they will check into if you're living in the house as a primary residence.
If someone would love to know about reverse mortgages, if it's good for them, what will be the first step to start?
Well, the first step to start would be to contact me. You want to contact me, and let's just go over the situation. I can go over numbers and go over whatever goals you have, so I can better assist you with that. It's the best thing to do, just to see if you qualify, or to see what we can offer you with the reverse mortgage.
So I know this is something that a lot of people feel fearful, right? Especially it's going to be for elderly people. So it might be good for maybe their children to contact and then be in the meeting, right?
Yeah.
From what I believe, reverse mortgage is not like regular loan that you can just do it online or over the phone.
Yeah.
Is that right?
That is correct. So my services are offered to my clients. I go to them. They don't come to me. And if they do have a trusted advisor, that can well be a financial advisor, a trust attorney, or even the kids, they're more than welcome to come and sit in and ask their questions to make sure that everyone is comfortable with the reverse mortgage.
Will there be any upfront fees that they have to pay?
No, not at all. My service is free when I come to their house.
What is needed in order to get a reverse mortgage?
Well, what is going to be needed, first of all, for me to know what you qualify for, I'm going to need the names of anyone who's on title. I need date of birth. I need address. I need to know if there's any mortgages on the property or any other type of liens. That's how I get an estimated quote for you, where I can provide you numbers. And then for the loan itself, it's just regular documentation that is needed, for the processing of the loan once they decide to move forward, which is basic stuff like a copy of the driver license, copy of the social security card, homeowner's insurance policy. If you have a trust, we do need a copy of the trust. We want to make sure we abide by whatever the trust says, and then also property tax bill, that kind of stuff. So just basic documentations to process a loan.
How long does it take in general?
Right now we're averaging about 35 days. Sometimes it could be up to 45 days, but on average 35 days.
Is anything else that you'd like to add?
Yeah, I think one of the other misconceptions, one of the biggest ones that I have, especially because I'm in the community a lot, is that the lender will take your home, and that is not a true fact. Yeah, that you've heard that, right?
Right.
So one of the things that a lot of people think is that the lender will loan you the money, but then they change the name on title, which is incorrect. So there's no changes in title. The house, it does belong to you. You can refinance, you can sell. If you win the lottery, you can pay back. There's no prepayment penalty with these loans. So that's one of the biggest misconceptions we have right now.
Oh, I have another question for you. So if the borrower dies, right, and heirs will, take the possession of the house, what would happen to the reverse mortgage?
Well, upon the death of one or two, depending on who's on title, okay, upon the death of all owners of the home, the loan does become due and payable. So the loan does have to get paid back. So normally the guidelines tell us that it's 6 months to repay back, whether you refinance or sell the property. If at that time you still are not able to refinance or sell the property, you do have 2 available extensions of 90 days at a time that you can actually apply for. So it could be extended up to 12 months in order to address the loan at that time.
Got you. So basically it's the extension that help the heirs or whoever takes the possession of the house to be able to take care in terms of refinance, or if not, just sell the house.
Yeah, so they have the option of refinancing or selling. It depends on the trust, right? Because the successor trustee would be the one responsible for dissolving the trust.
But in case there is no trust?
Well, if there is no trust, we know that in California, everything goes through probate. So they would have to go through the probate system.
Got you. All right. I think we have quite a bit of information from Maggie. We learned a lot from your experience.
Thank you. Thank you.
So thank you so much for coming.
You're very welcome. Thank you for having me here.
Thank you.